Tim, your thoughts on the market performance today, your short-term outlook?
Yeah, well, didn't seem to be a lot of conviction in the market today. As mentioned, volumes were pretty low, a bit under $3 billion traded today. I just don't think there was all that much to trade off today following the sessions that we saw on markets on Friday. We saw some economic data released today that drove the market a little bit, but we did underperform the broader region. The China market performing well today, up over 2%. But the sectors were pretty mixed as well, so there wasn't a whole lot to read from there as well. We saw some of the defensives like the property and utility outperform, but then some of the other defensive sectors like healthcare and staples underperformed the market today. So we did see the economic data released have a little bit of an effect on the market and some single stocks in particular. There was that housing finance data showing around a 0.5% fall after a few months of growth in lending finance. And if you look at a stock like GWA, which provides building fixtures to housing and commercial construction and etc., that was off around 6% today on that data. We also saw that jobs ads data where that fell for a 10th consecutive month, and you look at a stock like Macmillan Shakespeare that provides salary and remuneration services to companies, that was off around 4% today on some disappointing employment data. So interesting day on the market. In terms of a short-term outlook, I think the market may well just trade a little bit sideways for the next couple of weeks. You're just talking about earnings season starting in February. I think that's going to be key for the market. So maybe the market won't be willing to trade significantly higher before we start to see what these earnings are going to look like. Certainly there are a lot of expectations that it is going to be a soft earnings season, but I think it will be important in terms of whether the market can rally further following that earnings season.
In Australia, energy sector for you, one to watch in this upcoming earnings season then?
I think it will be. As you mentioned, LNG, a big importance to these. So a lot of these big players now have very large exposures to LNG. There's a large amount of LNG projects being developed around Australia by the big players, and we know this sector has underperformed. You look at the big players, Woodside, Santos, Origin Energy, have all been pretty, have underperformed the market over the last little while. They've underperformed the rebound in oil prices as well, and also underperformed sort of a general cyclical rally that we've seen over the past couple of months. And heading into February earnings season, as mentioned, some expectations of some softness there. I think the energy sector will be one to watch. If we look at Woodside Petroleum, for example, their last quarterly production results to September, production came in very strong, higher than expected. Their Pluto LNG project well outperformed expectations. They upgraded production guidance, and they also gave a strong 2013 guidance in terms of production. And then if you look at the other big player, Santos, it's also underperformed over the past year or so. I think there's the market very concerned about the cost blowouts we've seen at some of its LNG projects, and maybe in the near term the concerns about further cost blowouts could well continue to weigh on its share price, but it appears to have some value at current levels. It certainly has good growth in the future. A lot of its earnings due to come in not until sort of 2014, 2015 with its LNG projects, but it's certainly good value there and good growth prospects from the potential of shale gas within the Cooper Basin as well. So that company in particular becoming very focused within LNG as well. It could very well divest some of its non-core assets to focus even more strongly on some of these big LNG projects. But in general, I think this will be a sector to watch. As mentioned, it is underperforming. It does seem to have some value around, particularly within those large players like Woodside Petroleum and Santos.
Stocks having quite a good session.
Higher in trade today, it rose about 0.75% to around $368 a pound. And we did see some of the copper stock perform quite well. Discovery Metals up over 2%, Sandfire up over 2%. One underperformer though was Oz Minerals that fell over 2% today. I think there's a little bit of speculation in the market at the moment. Some of these well-established and smaller cap copper producers may well be takeover targets within the space at the moment. But we've also seen copper prices move off some pretty low levels through mid-2012. Falling is sort of down around to $330 through sort of June, July in 2012, and as mentioned, they've bounced back to almost $370 a pound at the moment. And I think there's some expectations in the market that the copper price could be in for a nice steady rise for the time in the future. Supply-wise, we've seen some large projects put on the shelf, most notably some like BHP's Olympic Dam. While on the demand side, as mentioned just then, China demand still looking pretty strong, and also the US, another large consumer of copper. The economic recovery there will be a positive for copper demand moving forward as well. But I think if you have a look at a chart of the 2-year price of copper, what you can see here is the price has actually been narrowing in a trading range. It's narrowed quite significantly more recently, and generally when this happens, you can expect to see a breakout in prices. So it's at the top of that sort of trading band at the moment, so a breakout to the upside would be a positive in terms of copper prices moving forward. We'd probably look for around that $4 mark if that did happen. So at the moment, some of those copper players have been performing